I really want to love TSLY. I really do. Unfortunately, I only like it as a friend. I'm probably the only person on finance YouTube that's ever friend-zoned an ETF, and I think that's worth a tap on the like button. Thank you very much. When I first heard about TSLY, I was immediately drawn to it because of its steely blue eyes and flowing blonde hair. No, obviously, it's extremely high dividend yield and overall strategy, of course. I love the idea of getting income from Tesla options and not having to do the work myself to do them. Sign me up. But there wasn't enough data available for me to feel comfortable putting my hard-earned money into it. I've been burned before, so whenever I see a high dividend, I'm on alert for a dividend trap. For a while, TSLY was the new kid in school and everyone seemed to want a piece of it. The thing is, as important as it is to invest in the right assets, it's also important to avoid bad ones, since we don't want to lose money, and if you get caught up in the excitement and just toss in some money and see what happens, it feels like more often than not that strategy loses money. But also, that money could have been invested somewhere else and done way better. I'm not saying TSLY is a good or bad investment. That is for you to determine on your own. I'm definitely not telling you what to do. I'm not a financial advisor, and this isn't financial advice. But in this video, I'm going to break down the performance of TSLY over the past few months on shorter timeframes, compare it directly against Tesla stock at the same period, show you not one, but two huge red flags I found for the fund, and at the end of the video, I'll give you my take based on the data for what I'm doing with TSLY, and we'll discuss how investors can approach this ETF for the future, since there is a couple scenarios I thought of that could make TSLY a serious cash flow machine if you're willing to take the risk. Remember to let me know in the comment section down below what your plans are for TSLY, how you feel about other yield max ETFs, what I got right in this video, what I got wrong, and what I missed. With that being said, let's get into it. So TSLY first entered the market in November of 2022 and first started trading at close to $20. Unfortunately, from the periods of November 2022 to early January of 2023, the price of Tesla dropped like a rock to $112. That's down close to 33%. Naturally, TSLY followed in a severe price decline, trading close to $13.40, down about 33% as well. So early on, investors already knew firsthand that this ETF was going to capture the downside of Tesla. The fund managers were very clear that this ETF was going to do that, and now we have the data that says this is true. What remained to be seen was how it handled the upside. By mid-February, Tesla had risen back up and was trading around $214, up 47%. At the same period, TSLY was trading at $17 or up 21%. We know from the fund strategy that TSLY will not capture all the upside, but TSLY did pay a dividend in January of 99 cents. If you reinvested that back into the position, not only did you add more shares, your overall return bumps up to 34%. For simplicity, I just added the dividend to the share price, so these are very rough calculations, and of course this doesn't count for taxes either. So very quickly, this ETF was performing as expected. But fast forward to November of 2023 and Tesla is trading at $235, up about 9% from February of 2023. Meanwhile, TSLY is trading at $11.40, down about 33%. Not ideal and not what I was expecting. Now, TSLY did pay $6.90 in dividends during that time period, and if you reinvested all that, you're actually up 7%, assuming you reinvested January 2023's dividend as well. I think now you can see the problem with TSLY. Red flag number one, based on the past few months of data, the only way the fund works out without losing investor money is if you're constantly reinvesting the dividend. And for someone looking for income like myself, all this ETF seems to do is increase my risk just to barely break even, and in my specific position, increase my taxable income. Keep in mind, I am not hedging with stocks of Tesla or any other positions, and I'm not using margin. I'm just seeing TSLY as one position. Now, it's true, you can compound and add more shares regularly, and that has long-term benefits, but you're going to want to see this chart. For 4 months straight in 2023, the overall volume for this ETF was in the negative, which I'm interpreting as it was sold more than bought. Now, this typically is not a huge deal. This happens in the S&P 500 too from time to time. The problem is that this ETF doesn't hold any amount of Tesla stock since it uses a synthetic covered call strategy. If an ETF that uses a covered call strategy holds the stock, some of the price action of the ETF can be attributed to the movement of the underlying holding. With TSLY, there is no underlying holding. TSLY's own website makes this very clear, so I'm left to assume that the price of TSLY is simply based on the supply and demand of TSLY itself, and that means the only way the price is going to bounce back is if new investors come into the fund, and I'm not sure when or even if that will happen. Let's really drive this point home because this is red flag number 2. When Tesla was trading at $112 on December 28th, 2022, TSLY was trading at $13.66. Here, at the end of November 2023, Tesla is trading at $234 and TSLY is trading at $11.39. From this, we can clearly see that if Tesla moves up, TSLY is not guaranteed to move up as well, despite there being periods of time where it did move up and down accordingly. I'm not sure what the price estimates are for this ETF, but for me, this is concerning since Tesla is up almost 2x and TSLY is down a few dollars. Maybe the market is wrong and this is the deal of a lifetime, or maybe this fund continues downward towards zero and watches Tesla march up. Yes, depending on when you bought, if you reinvested the dividends, you probably did maintain, maybe even earned capital. But ultimately, with more recent data, I'm not thrilled. I'm just not a huge fan of huge drawdowns with no clear path to price recovery because I do believe that Tesla will have huge moves up, but I do believe it will also have huge moves down, which TSLY seems to capture and never recover from. I'm not sure how the fund managers are planning to address the constantly declining price, otherwise known as NAV erosion, but if they do somehow manage to figure it out, TSLY might just be the best game in town. But we do need to remember that this fund isn't even 2 years old yet, so sometimes patience is the answer. We'll find out together. For those of you with existing positions or thinking about buying, there are 2 scenarios where I think TSLY and TSLY investors do come out ahead, and of course there are no guarantees this will actually happen. One is a situation where the price of TSLY bottoms and either stays flat or rises. If it stays flat and assuming the fund managers can still generate a yield, you can earn from your investment without losing money from the price of the ETF going down or even gain from it going up, at least on paper. If an investor continues to reinvest the dividend, you can accumulate more shares, increasing your income potential and eventually being able to take out your initial investment and basically play with house money. My problem with this is that this relies on being able to time the market on an ETF that has very little price history and that's also associated with a volatile stock, and that's just not my strong suit. And from where it's trading today, there is still significant downside to go. If Tesla dropped another, say, 50% and TSLY follows, which based on the history it would, that would mean that investors would have to reinvest their dividends for longer in order to hopefully maintain their capital and potentially see a profit after the drawdown stops. With a stock like Tesla, where a single broken window can cause a media frenzy and volatility, this is a real risk. The bright side is that the TSLY dividend seems to be consistently paying out through all of this price action. So if the price of the ETF drops, those dividends are able to buy you more shares for a lower price, helping you compound. The second scenario is one that lies way out in the future, where Tesla becomes a boring company with not as much volatility and has grown in value so much that anything even remotely related to Tesla, like TSLY, has been tugged along with it. Who knows if that will ever happen, but if you've been here since the early days of TSLY compounding away, you might have a huge amount of income because of it. But with high reward usually comes higher risk. And I'm sure there are many other ways TSLY turns out to be one of the best investments ever or just doesn't pan out at all. I think there's always going to be some appetite for risk, so after everything we found out, I think TSLY for me is that good friend that I'll check in with every now and again, but for the moment I'm not starting any positions anytime soon. Based on the past few months of performance, there are better options for me personally and my investment plan for both the short term and the long term. As far as the other yield max ETFs, I want to love them too, but for the most part it's still too soon to tell if any of them are right for me, and once more time has passed, we'll be able to see exactly how the funds perform in different market conditions, and we can make better decisions as that data becomes available. Not all of them are associated with stocks as volatile as Tesla, so I'm hoping that at least one of them will show me some early signs of promise in the next few months, and if I decide to start a position in one, I'll be sure to let you know and make a video about it so I can share with you what I found in my research. If you're interested in that, be sure to subscribe for more content. See you in the next video. Thanks for watching, good luck in the markets, and have a good one.